Hello everyone, this is Jordan. This video is being recorded on the afternoon of Friday, June 14th, 2024. Thank you so much for tuning in. In this video, going to recap the week for gold and silver and the miners and look forward to next week. Hope you all had a great week. For the week, we had gold up about 1%, silver up just a hair, then the miners, all those ETFs down slightly. To sum it up, gold and silver still correcting, still biding their time. How it plays out remains to be seen, but I'm sure we'll get more hints over the days and weeks to come. Now, let's get into the charts. So there is very little as far as new things to say. Again, this is the gold-silver ratio. Sector's correcting, so you have gold outperforming silver during this correction. Maybe it rallies a little bit more up to previous trendline support, which is now resistance, because this was a significant breakdown in the gold-silver ratio. So 79, just below 80. Again, maybe it can climb another couple points here. Silver here, gold here. Gold is more interesting to me because the question is it going to remain above 2,300 and this area here? I mean, I could put a line here, which is just below 2,300, because all along this has been looking to me that the odds favor it will fall below 2,300, then come down to 2,240, which I've been mentioning ad nauseum. You also have this support at 2,200. Then the key moving averages in bull market corrections. 50-day, it's already broken. So then we have to look to the 100-day here in the 150-day. If this correction continues for a couple more months, these moving averages are going to reach much higher levels. The 100-day here we can see, I mean, this is probably by the end of July, this could be above 2,300. And then the 150-day rising as well. So that could come into play in a couple months. But the key question, again, is will gold continue to hold above 2,300? Because if it does, if we get a real test of 2,300 or maybe even like a false breakdown where it closes below it for one day, then you get a rally back above, then you could be building like a bullish consolidation here. So don't want to rule that out yet. The longer gold holds above 2,300, the better a case we can make for that. Silver, just some ugly selling. I mean, some ugly candles here. But nevertheless, in between these ugly candles, you have strong accumulation candles these at the same time. It's interesting because if you look at the white candles, silver's closing at the high of all these days. Then you look at the black candles, silver's closing here and here. Also here, it closed at the low of those days. But anyway, getting into the price action. So it did come down below 29. And this is, again, call it 27.75 up to 28.25. I'm looking at this level as support. The 100-day is climbing here. Again, nothing dramatically new to say other than the fact that maybe the odds of gold holding 2,300 are up a little bit, but still not enough info to call it one way or another. Now, let's look at the weekly chart, see if we see anything different or new, and honestly, not really. Let me start with silver. So just above 26, this is now really strong support. The measured move, as I've said in past videos, you're getting up to around 34, 35. So silver did not quite hit that. But just carefully looking at the price action, so 26 is now strong support. You did have a good test here in a strong rally. Now we're coming back. These candles are kind of ugly. This is not that bearish. It's not a bullish hammer, but it's not that bearish. So again, these are the support levels on the weekly that I'm looking at. But if we go back and look at past price action, we can see how this area was resistance over here. So if silver, even if it dips below 28, if it can correct a little bit and bounce around and I guess give us evidence that it's holding above 28, 29, we get more evidence of that, then it could base before that next big move up. Okay, now let's get into the stocks. Okay, so GDX here, GDXJ, SILJ at the bottom, daily bar charts. The moving average is the 200-day exponential moving average. Do yourself a favor, look at the last 25 years of gold stocks, and you can see that the 200-day exponential moving average is a very good support level in bull markets when the bull market is correcting. And we can see all the ETFs here. They came down to the first support level. We can see here around 33 for GDX. For GDXJ, that comes down to the low 41s. For SILJ, it came right to the low 11s. Bounced today to close the week. I'll stick with GDXJ here because you don't want to hear me say this 3 times. But we can see this is the strong support level laterally, 40. Here's the moving average, 38.42. The moving average is climbing. So this, I think, probably by early July, we should see this rise up to 40. So in here, we'll have even more support. So maybe we see a little bit of a bounce. It comes down a little bit lower, and maybe it's going to test 40. Again, I know there's a lot of maybes in here, but we're just thinking out loud of the possibilities. But generally speaking, we've had a nice little correction here in the minors in GDXJ, but you can see it correct a little bit more. We'll just have to wait and see what happens over the next couple weeks. If it stabilizes and continues to hold above here, maybe you've seen the end of the correction. At the same time, maybe there's one more move down to this level. And especially if you get gold breaking 2,300, that could happen. But be advised of the potential for a false breakdown. So you could have gold breaking below 2,300 for a day, and then that forces all these ETFs down to this support level, this one here. And if that proves to be a false breakdown and you get a big rally the next couple of days, that could be the bottom for the correction. But anyway, this is where we are here and now. Obviously, a lot of stocks I'm following, they're in much better buy position now. They've probably seen most of their decline. Maybe there's a little bit more to go. But that's where we are. Again, nothing really exciting new to say. The correction continues. I think we've seen most of the damage, but there could be a little bit more. We'll see how it plays out over the coming days and over the coming weeks. Big picture is still really bullish, and you have to use this weakness and use corrections to buy and add to your positions. Because if not, then you're just going to be chasing things higher, and we don't want to do that. All right, that's it for the video. Let me know what you think. Leave a comment, like the video, subscribe if you haven't already subscribed to the channel. I would really appreciate it. And I hope everyone has a great weekend, and I'll talk to you guys again in the next video.